Hi friends, I am Mallikarjuna, studying in MCOM 4th semester, Department of Postgraduate Studies and Research in Commerce, Kuvempu University, Gnana Sayadri, Shankaragatta. For partial fulfillment of the MCOM degree, I am carrying a project conducting on innovation in banking products and services provided in Shumoga district. In this video, we have to know about what are all the innovative products and services in the banking sector, and we should know about the importance of the innovation in the banking sector. Firstly, we should know about the introduction part of the banking sector. Firstly, we should know about the meaning of banker and the bank. First, banker. According to the Banking Regulation Act 1949, a banker is the one who is engaged in the business of accepting deposits from the public and utilizing such deposits either for the purpose of lending or for the purpose of investment. And bank is a dealer or transactor of money. They are the financial intermediaries collecting deposits and lending loans. Firstly, we should know about the introduction part of the banking system. Banks were considered as backbone to the financial system and play an important role in economic development of a nation. They act as intermediaries in channelizing funds from surplus units to deficit units to the fully utilization of the funds. Banking system is playing a very important role in the development of our country. Banking has occupied an important position in our commercial world. Commercial banks are the oldest institutions having a network of business. The Indian banking industry plays an important role in the economic development of the country and is the most dominant segment of the financial sector. Banks helps channel savings to investments and encourage economic growth by allocating savings to investments that have potential to yield higher returns. Now I am telling about the concepts included in this project. Innovation represents the adoption of new idea, process, product or service developed internally or acquired from the external environment. Innovative banking is being viewed as a cost reduction and convenient channel by the customer and banks. It saves times and there is no geographical boundaries to it. Bank customers residing in India can have their bank transaction worldwide through the information and communication technology. Infrastructure is very important part of the innovative banking technology. In innovative banking technology, one added cost involved in terms of acquiring and maintenance of computer equipment. The innovative banking has changed drastically the way the banking transaction and services delivery is carried out by the banks in India. Information and communication technology has transformed the product delivery channels of banks in such a way that they sell their banking products to customers by using internet. Several innovative banking technology include NEFT, RTGS, online marketing, ATM, mobile banking, fund transfer, etc. Then we shall move to the status. In recent days, innovation in banking products and services provides the country's economic development and its GDP. The innovation is necessary for all the banks to improve their business activities and maintain a good relationship with the customer. Each and every banks are should give more priority to research and development activity for improving the innovation in banking products and services. Nowadays, all the banks are interested in the improvement of the products and services to provide a good services to the customers. Presently, all the banks are interested in the improvements in their business activities because of the heavy competition from domestic and foreign banks and to get a more number of customers. The bank should innovating their products and services to retain their existing customers. Now I am telling about the need for the study. Many of the customers are not much aware about the innovations in the banking sector and to examine the importance of new innovative products and instruments in the minds of the customers. The new innovations also help for the banks to reduce the work burden and also help to bring the accuracy and security in the each transaction. Globalization has brought competition from international banks. In order to compete with the new entrants, the Indian bank should adopt the new technology and innovations in their products and services. Now I am telling about the electronic banking products in India. Generally, electronic banking called as e-banking. E-banking is defined as the automated delivery of new and traditional banking products and services directly to customers through electronic interactive communication channels. In the recent past, a large number of banking services shifted from traditional banking to e-banking. The present study focuses on the important forms of e-banking such as ATM, debit cards, credit cards, RTGS, NEFT, mobile banking, etc. Firstly, we should know about what is mean by automated teller machine. Automated teller machine, commonly called as ATM. An ATM is a computerized machine that provides the customer to make a financial transaction without the help of a bank employee. For using an ATM, the customer has to obtain an ATM card or debit card from his bank. Using an ATM, a customer can avail various services like withdrawal of cash, depositing money, check the balance inquiries, etc. The system is recognized as anytime money or anywhere money as it permits the customers to withdraw money from the bank from any of its ATMs without any constraint of time. ATMs is also beneficial for the customer who regularly visit foreign countries. They can withdraw money in foreign nations. The currency will be converted at the financial institution exchange rate. Nowadays, ATMs are considered one of the easiest modes of withdrawing money. Now I am explaining about the debit cards. A debit card is a plastic card which delivers an alternative payment system to cash when we make purchases. Customer need not carry paper cash instead of using paper cash. They can use their cards to cash withdrawal and make purchases. In India, the majority of banks provide debit cards whenever a customer opens a bank savings bank account. As and when cash is required, customer can withdraw money with the help of debit card. It also enables customers to use ATM machines. The customer can withdraw the money if he has sufficient balance in his account with the bank. Although many debit cards are of the Rupee card, Visa or Mastercard kind, there are many other forms of debit card each recognized only with a particular country. Customer needs to be most careful when they are making transaction. Now we shall move to the next one, that is credit cards. A credit card is also known as plastic money which permits its customers to buy goods or services on credit basis. The credit cards are given by the banks and when customers sweep the card for their purchases, a line of credit is granted by him. As he can make purchases on credit basis, which are to be repaid later to the bank. A credit card transaction is often more secure than other forms of payment such as cash payments or check payments. Customers have a fear to use credit cards because it leads more spending than required. It also involved a high risk of fraud if in case the cards get stolen off or if the card's information is shared unknowingly. Now I am explaining about the National Electronic Fund Transfer. It is generally called as NEFT. National Electronic Fund Transfer is a nationwide payment system enabling one to one fund transfer. Under this system, individuals and corporates can electronically transfer funds from any bank's branch to any individual. Corporate having an account with any other bank branch in the country participating in the scheme. For being a part time of the NEFT funds transfer network, a bank branch has to be National Electronic Fund Transfer enabled. Any individuals, firms who holds savings bank account with a bank branch can receive or send funds through the NEFT scheme. Hence, it is necessary for the customers to have an account with NEFT enabled bank branch. There is no maximum limit on the number of funds that could be transferred using NEFT. From July 10, 2017 onwards, the settlements of fund transfer requests in the NEFT system is done on a half-hourly basis. Now I am explaining about the real-time gross settlement. Generally it is called as RTGS. It is defined as the continuous settlement of fund transfer separately on an order by order basis. Real time means processing of orders at the time they are received rather than at some later time. Gross settlement means the settlement of fund transfer instruction takes place individually. Considering that the funds payment takes place in the books of RBI, the payments are ultimate and irrecoverable. RTGS is mainly meant for large value transaction. The lowest amount to be settled throughout RTGS is rupees 2 lakhs and there is no upper limit for RTGS transaction. The banks have to transfer the funds from one account to another on a real time basis, which the customer can receive the amount within 30 minutes from receiving the fund transfer message. The RTGS service for customers transaction is available to bank from 9 a.m. to 16:30 p.m. on working days. Charges levied by banks for offering fund transfer through RTGS system. There are no charges for inward transaction made through RTGS. For outward transaction, rupees 30 is charged for the transactions of rupees 2 lakh to 5 lakh and rupees 55 is charged for the transaction above rupees 5 lakh. Now I am explaining about the mobile banking. It is the act of performing banking transaction on a mobile device like cell phones, tablet, etc. Mobile phones as a medium for conveying banking services and have reached greater significance because of their pervasive nature. Banks are allowed to offer mobile banking services through SMS, USSD, or mobile banking application after obtaining necessary permission from the Department of Payment and Settlement Systems. Mobile banking services are to be made available to bank customers irrespective of the mobile network. Banks which are licensed and have a physical presence in India. Only banks who have implemented core banking solutions are permitted to offer mobile banking service for the customer. To enable mobile banking services, the customer should fulfill Know Your Customer norms. Now I am explaining about the fund transfers. Internet banking or online banking allows a customers to transfer funds from one account to another across branches and cities. Some banking institutions have gone one step ahead by offering the customers the facility to transfer money from his account to that of any person with an account at the same bank or any bank anytime and from anywhere. All that the customers have to do is submit a signed declaration stating that he wants to access this facility. So, it is clear that banks in India are operating in an increasingly competitive environment. Not only the banking market has seen a large number of players competing with one another, but also the new entrants have the advantage of starting with a strong capitalization, modern technology, lean network, and more importantly, without any accumulated problems of the past. It is also fair to expect that the initial target of the new competitors will be the most profitable segment of the banking business, that is, high value corporate customers, business relating to high net worth individuals, foreign trade related business, and so on. Customers now have a real choice. Banks have become more customer responsive. The future of Indian banking therefore holds greater promise for those who are willing to accept the challenge. Thank you for watching this video. Please like and share your comments to this video.